friends, in this lecture we are going to discuss three fundamental accounting concepts called as the business entity concept, the going concern concept and the money measurement concept. So we will take up these three concepts for discussion in this particular lecture. Now let us take up the first concept for discussion, business entity concept. Now what do you mean by the business entity concept? According to the business entity concept, the business is considered as a person separate from the owner. Business is considered as an entity. The accountant in his mind treats the business as a person separate from the owners who have started the business. This is called as the business entity concept. The business is considered as a person distinct from the owners, the creditors and the outsiders. This is considered as the business entity concept. Now the question arises, why business is considered as a separate entity? Why should we treat the business as a person separate from the owner, creditors? See, the owner has started the business, the owner is going to take all the decisions, the owner is going to do lot of activity in the business. Then why should we consider the business and the owner as separate? This is the question that arises. The answer to this question is, if you want to find out what is the result of the activity of the business, you want to know what are the assets, liabilities of the business, you want to know whether your business is doing well or not, what we would have to do is, we would have to separate the transactions of the owner, the personal transactions of the owner's personal incomes, personal expenses, his personal assets, his personal liabilities have to be separated from the transactions of the business. The transactions of the business, the assets of the business, the liabilities of the business, the income generated from the business activity, the expenses of the business activity should be separated from the transactions of the owner. Now, if we can make such distinction, if we can record the assets, liabilities, incomes, expenses of the business in business books of accounts, in such case we will be able to find out what are the results of the activity done in the business. That is, we will know whether our business is making profits or losses. We will also come to know about the financial position of the business, how many assets the business has, what is the value of the assets of the business and what are the liabilities of the business. Whether the business is doing well or not, that can be found out only when there is a distinction between the transactions personal to the owner and the transactions of the business. So the accountant maintains separate set of books of accounts. He says, I am an accountant for the business. For me, the business is a person. He is my employer. And I am going to keep separate books of accounts only to record the business transactions. I don't have anything to do with the owner. Owner is an outsider. Maybe, yes, he would have contributed capital. He is taking all the decisions. But for the accountant, in the mind of the accountant, business is considered as a person. He treats the business as his employer and he is going to record the transactions of the business in books of accounts kept for recording the transactions of the business. This is considered as the business entity concept. Now, application of this concept. Let us discuss the areas where we apply this concept. See, any accountancy student, the first journal entry which we learn is capital introduced by the owner. What is the entry you write in the books of accounts of the business? When owner introduces capital, the accountant is going to pass the entry cash account debtor to capital account. What is the logic we use? Cash, real account, coming in, debit, capital, owner, personal account, giver, credit. We treat the owner as a person, as an outsider who has given some money to the business. We record it as a loan. We remember the owner as a giver of loan to the business. So when we are recording the entry relating to capital introduced by the owner, we are already applying this concept called as the separate entity concept. The accountant records the capital contribution by the owner as a liability in the books of accounts of the business. I think you all know that in the balance sheet we show the capital on the liability side of the balance sheet. So we treat even the capital contribution of the owner as a liability, because